I have a 401k, but I left my job 2 years ago. What do I do with it? Can I roll it over? Do I take it out and put it in my checking account? What should I do? I'm a teacher. I have a 403B. I currently work at the same job for the past 18 years in the same school district. What options do I have? I'm a police officer. I've been working on my job for the past 27 years. I'm looking at retiring in the near future. I have a pension plan. I have a 457. I've got another deferred comp somewhere else. These are all examples of questions that lots of clients will come in and ask us. I'm just going to talk about 5 different qualifying events where you can now roll your old retirement plan into your own IRA. So I'm going to discuss all 5. Number 1 is if you lose your job. Number 2 is if you quit your job. Number 3 is if you retire. I know lots of people nowadays are retiring. So let's just say you wanted to retire. You're saying to yourself, I'm tired of working. I'm 67 years old. I got a good chunk in my 401k. What are my options of retiring? If you were to retire, now you can roll the money from your old retirement plan into a new IRA that gives you a bunch of different benefits, which we can discuss in a second. Number 4 is if you get a divorce. There is a document when you go through a divorce that will allow you to transfer your spouse's assets to your asset column now. So it's a tax-free exchange. It's called a quidro, Q-D-R-O, quadro, whatever, however you want to pronounce it. So that quidro document will give you an opportunity to grab a half of the assets from your spouse and now put them into your own IRA. And then number 5 is if you change or your company changes administrators. Give you an example. If I work at XYZ company and now XYZ company had, just hypothetics, if XYZ company had Fidelity and now they get a new HR director and the new HR director says, I don't really like Fidelity, and they decide to go with Merrill Lynch. Now that is what's called a change of administrators. They're changing the platform of that particular qualified plan, that 401k. If that happens at your job, you have a certain amount of days to actually make the transfer to the new 401k platform, or you can roll it into your own IRA. And people take lots of advantages to doing that because they don't like to have it locked up at their company or just have one diversified fund. Instead, they have a multiple diversification plans and different platforms. So those are the 5 qualifying events. What could benefit you? Where would you roll it over? What are the guarantees inside of the different plans? These are all supplemental questions as you go on. Now, if you want to learn more, please subscribe to our YouTube channel, and there will be tons of information that we share. We won't normally discuss lots of different companies, but know that we have tons of different options. Here at the Financial Architects, we're a brokerage company, so we deal with several different insurance and investment firms. You get a big choice of what you want instead of just being forced into one category. If you need to get in contact with us, please contact us at our 800 number, 888-350-5396, or feel free to reach out to us on our website, tfainsuranceadvisors.com. We look forward to competing for your business, and hopefully we'll meet someday. Thank you very much. Hopefully you got some education out of it.